Hi, this time is different. Let's first scroll down and look at this. This is from a calculated risk. They came out and he says, I think the most likely scenario is nominal house price declines at 10% or more from the peak and real house declines at 25% or so over the next 5 to 7 years. And I think that's pretty much the best estimate I'm thinking right now. Although for Phoenix, it's going to be more than that. We were the peak. So we're going to come down, I'm thinking 20%. Right now, we're already down 8%. That'd be like 9% adjusted for inflation. So 20% total fall for Phoenix, I don't think is unrealistic or more. And here it is. The median sold price fell 7.8% from May to September, 4 months. I did a little bit of adjusting for inflation, although we don't have a CPI numbers for September yet, but that's 9% over those 4 months. Here's the big issue I've talked about before, and it's this is the number of active listings, or the number of homes that are listed for sale in the MLS, and this is for the whole market. It's up 168% compared to what it was a year ago. The year ago line is the blue line, 2021, so it's up 100, excuse me, 168%, and that's 18% above 2018. The orange line is 2018. 2018 was kind of considered a normal year, so it's quite a bit more. But when you scroll down to look at homes that are just 2,000 square feet or less, which is like half the homes that are sold, the inventory is phenomenally more. You can see it's up this much higher. So it's up 219% from the blue line here. Well, that's triple. And then 58% from what it was in 2018. So that is a ton. So here's the takeaway. If you're selling a single family house under 2,000 square feet in Metro Phoenix, you've got a ton of competition. And if you're buying, you've got a ton of houses to choose from. Now I'm going to talk about why it's different this time, why this time is different. And that's rents. So you can see down here the last time rents were going down. There were so many people buying new homes that there was the demand for rents was falling. And then it came up a little bit and was flat for a long time until like 15, 16, and then it started taking off. So the difference here is if you bought a house as an investment, this is for investors. If you bought it as in here, you're fine. Well, unless rents take. That's a big question. Are rents going to fall? If so, how much? But you can see rents don't move around as much. They're just, but nevertheless, they could fall some. But if you're bought in here, you're probably fine because you're getting more rents than you expected. But if you bought up here and you had put in that you needed these kind of rents, whatever they are, that you put in your pro forma, that you need those rents to break even, then you could be in real trouble if rents go below that. Then you're negative cash flow. What happens to those people? And then they have huge interest rates. If they didn't get a long mortgage and they have to refinance next year, that would be really bad. That could be also focusing more on multifamily as well, not just single family. That those multifamily investors were coming in and being too optimistic, and so they got, oh, I got to go lower rates, so I'll get a short-term mortgage instead of getting a 5 year. If they had a 5 year, they're fine. But if they had a one, uh, oh, they just got a, what do they call it? Short-term mortgages. That's not the term. Well, they were doing rehabs, and then they were going to get a better mortgage, and now rates are way up. So what happens to those? I don't know. I don't know the mortgage side of that, the money side of those bigger investors, those multifamily investors. And who knows what's going on? I got surprised last time in 2005 about all the crazy mortgages out there. I didn't really understand that they were set up back then that people were going to walk away just because they were getting a mortgage for more than the purchase price. So they got a mortgage for the purchase price and the um, the closing cost. So when prices stopped going up, a lot of people, well, some people started walking away even before prices started falling because they had no money in the deal except their monthly payments. So there was weird stuff going on that I didn't understand. Hopefully there's no bombs buried in the mortgage industry this time around. Oh, and this is really cool. There's a piece from James Hodis of the AEI, which is think tank in Washington, and here's a sample of it. And this one here links to a paper or a blog post of mine. So you can, here's the blog post that I wrote, and here's the one that he linked to. And the basically is the idea. Well, you can just read it right there. What it is that what happens in the housing market have a bigger political impact from now on because things happen much faster now than they used to, and the information is spread so much that it has a bigger impact. The housing market has a bigger impact on politics than it used to, and it used to have a really big impact. Here's some quick tweets. Here's from Kathleen Rager from the Arizona Republic, and just talking about rents, and that rents they fell in September, 1% in September in Phoenix, according to that. And there's other things here about rents being soft. Here's one saying that the rents were flat over the last 6 months in Phoenix, so it was the slowest increase in rents of any metro. Here's another one about Opendoor. If you're interested in Opendoor, that's a lot of detail there. Oh, this one is pretty interesting. Let me click on this. Like 9 years ago, John Burns Real Estate Consulting, they advise mainly new home builders and people related to the new home industry. And so this is in 2013. They got their people to say, what are the signs of a bubble? So we don't miss it next time. And they came up with all these signs. And then he goes through and says, how many of these can we check off today as being a sign of a bubble going on right now? Yeah, so check that out. It's fun. It's a video. Here's another one saying with how slow things are now, that the slowest pace for mortgage applications since 1997. Yikes. So things are really going to slow down from now, and that's because interest rates just went up again. We have 7% mortgage rates, so people aren't putting in their mortgage applications, which is a good sign that the sales are going to go down as well in the future. Here's a fun one from Taylor Moore at Redfin. They just look at like Google Trends, how many people are searching for these certain terms, and this shows like the red line is how many people are searching for homes for sale, and the gray line is how many people are searching for real estate, and the other one is apartments for rent. So you get an idea that just general interest in real estate has declined. Here's another fun one from Lance Lambert from Fortune. And these are the companies that are now predicting the prices will fall. So this list has grown over time, but you can see it's becoming more acceptable to forecast that prices will fall. And, 3 months ago, this was very short. And here's my chart that I updated, and you can see that this is where we are. If you click over to the chart, you can get the numbers behind it, and you can see that's higher than the highest point. This is for the number of houses for sale in the MLS. It's higher than the highest point in 2019. And also you can see the number of newly listed is still declining, which would be good news, except it's the sales. The number under contract and the number of selling is still way below what it was a year ago. And you can scroll, if you go down, you can compare and you can see how the actual numbers for number of newly listed homes for sale and actual sales. Great. I hope you found this valuable. Take care.